Hello and welcome to another update video about the DXY. DXY moved down further and that's sort of what we're tracking primarily, right? We have been leaning towards lower prices on the DXY. It is a pretty ugly move to the downside. I have to say that it's also only in 3 waves so far, but it has come down to really relevant support now at that next red line. We talked about, up there we talked about that we are leaning towards a top could be in, which I'm still doing. However, we haven't really broken below that $103 level yet, and that is the next level to confirm that we have really topped. So it's cascading probabilities, okay? It's getting more and more probable as more of these patterns fill in. Would be really helpful if we get a corrective rally next, ideally not exceeding the 61.8 retracement level here at $105.59. That would be really helpful if it stays below that this wave 4, and then maybe in a wave 5 breaks below that $103 level. So I think it's a very important week. Maybe this week, next week, we should have clarity there, and then we should see a wave 2 rally. Yeah, I mean, that would be a larger corrective rally, but that should not exceed the October high, which was made around $107.40. So yeah, that would be my preferred option, right? So I haven't got a very good view of the microstructure here. It's very choppy, very sloppy, but you can count that as a 5-wave move down in wave 3. Possibly we now get this wave 4, and I have adjusted resistance accordingly. Ideal resistance area for a wave 4 is always the 38.2 FIB level in most cases. It's just ideal. $104.66. Above that level, we've got the $105 level, and then $105.59. And as long as it stays below that, everything's in order, and we're watching for the price to come down further, if you like it or not. But that has been the expectation, and that is currently being fulfilled. Yeah, remember this pattern, it hasn't changed for months. We've been highlighting here an A wave down, then the B wave up, and now the C wave down into the low $90 region. However, is it as easy as that? No. There is, of course, a more bullish scenario. It is entirely possible that the B wave gets reset a little bit higher. That is always possible. It is a bit of an exotic pattern if that happens, but it would be possible. So if I shift this a little bit to the right, so the resistance wouldn't change, but the B wave would reset a little higher. That's of course possible. And we would have to assume that this A wave filled in like this, and this is a B wave down, and we could get another C wave higher, and then we break down. That's possible, but there's no need really to, let's say, worry about that or to make that really primary scenario, as long as our primary scenario is being followed nicely. And I can tell you, however, that's why we do technical analysis, not to give out prophecies or anything. No, we want to understand when things are changing in the chart. And the things are changing in the chart here if we see in this wave 4 rally a break above $105.59. It will not invalidate the structure as it is, but it will make it less likely. And that is when we need to take an extended B wave to the upside more seriously. It would not change our overall assumption, but it will certainly change the microstructures and the pathway over the next few weeks and months. So my favorite scenario would just be to fill in all the 5 waves to the downside there, followed by a 3-wave corrective rally, not exceeding the October high, and then to really get that major sell-off in a 3rd wave. Yeah, that's my update about the DXY. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 and regular stocks updates, check out our S&P 500 and stock service. You can find the link in the video description. Thanks a lot for watching. Bye-bye.